Welcome to Unfiltered Finance. I'm your host, Emily Turner, and joining us today is Lance Ippolito, our market expert. And Lance, boy, this is like the market nobody can read. So much chop. It's down 4% one day, up 3% the next. Is the market broken, or is this a situation where there's plenty of opportunity?
I wish I could say there was lots of opportunity, but it's almost like a roller coaster. Up one day, down the next day, up one day, down the next 2 days. And you get off the roller coaster and you don't know if you loved it or you hated it because you're throwing up. So in a normal market, I would say, hey, yeah, there's lots of opportunities. And I think there is very, very few select opportunities for patient folks out there, but it is broken, but it doesn't mean it can't be repaired.
Okay. So one of the things we were talking about for those opportunities when you can play the bounce or the dip or vice versa, when you look at a market like this, what is your instinct? What are you specifically looking at first?
Well, originally when we first started with the sell-off, it was, buy the dips and sell the rip. So every time we had a down open, you buy it, market would rally. Every time we had an up open, you sell it and the market would go lower. Kind of like your typical um, well, your typical buy the dip situation that worked so well over the past, like 5 years or so, right? It's kind of been the normal strategy. But then lately we kind of shifted and sell the rips like your typical bear market. So every time you get a morning pop, you sell it. But now we've had oil prices start to come down slightly and the market's starting to find a little footing to the upside. The hard part is knowing and being proactive, is it real or not? Because there's a lot of false signals and the market could look really good one day and then that whole, you know, thesis changes overnight because of a tweet or some headline news. And that's what has made it so difficult because you don't know, it's out of your control. And as a trader and investor, you want to control the controllable. But when it's some tweet at 4 o'clock in the morning or something, you're kind of left like helpless.
So then how do you know if it's a dead cat bounce or an actual genuine one when all of this is going on?
And that's a really good question. So a couple things I like looking at is market eternal. So that's the NYSE tick, which is stocks advancing versus stocks declining over their previous price. And that's really only intraday though, because you can't use that for like a week out in advance. So you're really having to shorten your time period. The big relationship right now is energy up, market down. Energy down, the market up. So you can kind of wake up gauging and say, all right, what is oil doing? If oil is up 5%, stock market's going to be down usually like 1 to 2%. If oil is down 5%, it's just that you're typical. You're having to track the price of oil because of the inverse relationship to the market. And in a healthy market, which I would love to see, is you have energy prices stabilize or maybe go up, and the market go up at the same time period. But now you're having energy up one day, down the next day, energy up 5%, 10%, Bitcoin up, Bitcoin down. There's so many different variables because there's so many different asset classes that there's really like no normal correlation. And like in economics school, you're taught, okay, if the stock market moves lower, then you have bonds go up. You have gold go up, right? You have a flight to safety. You have the yen go up. Now it's like market down, gold down, bonds down, Bitcoin down. And you're like, okay, well, where's the money supposed to go?
So then when you're looking at it and you're deciding, let's just say you think that this is a genuine bounce, what is your entry? What is your trigger? How do you then decide, okay, I'm going to actually make a play here?
If I start seeing energy move lower or energy stocks move lower, and usually small caps, so people can look at the IWM ETF, will lead the way to the upside. Then the overall market, and when I say the overall market, I mean the S&P 500 will usually go up. So it's first energy, second small caps, and then the broader market will move in that direction. So it's kind of like you kind of have to be monitoring everything intraday. And then if you have Bitcoin start to move lower, then you're going to have the tech sector move lower. So there's so many relationships and unhealthy dependent relationships. It's like dating a girl who's, you know, picking your nose and serving you old food, and you're like, well, thanks for making me this dinner, but it's not good. And you want to get out of the relationship, but she lives with you and you don't know if you could kick her out or not, or she's going to, slash your tires the next day. It's like you have to monitor everything. And for the normal person out there who's just flipping CNBC and you're thinking, oh, the market's up today. And then 2 hours later, you're like, energy prices rise, stocks fall. You're thinking, what the hell's going on? Is the market bipolar? Like, what's going, it's very difficult to time the market for more than a day. And it's very difficult to be proactive and where you want to put your money because there's so much uncertainty.
So then is this the market for day traders, and the shorter the time domain, the better?
Exactly. Because if you hold anything overnight, you have so much risk because you can't control the nighttime. And it's like, if you do, you're having anxiety on what happens the next morning and it's out of your control.
Yeah. So then when you're looking at where you're going to place your money and your bets, is there a particular sector that you focus on that maybe is less risky, or do you stick to the broad market ETFs? Where do you go here?
A really good question. So let's first start with the broad market. And when I say the broad market, we'll say the S&P or SPX is the index. I really like technically day trading it, but since it's an index, it doesn't count as a day trade. So you don't have to fall into that pattern day trade rule. So one of my programs, I do a trade every day at 10 a.m. and then at the market close, it expires, win, lose, or draw. That's been, I would say, like the most conservative because it is, you literally hold a trade for 6 hours, right? So it's not like, you put your retirement money in and then a year later you look at it, right? It's just something you can do every day. So I would say like that's the least conservative because your time in the market is so small, not a lot of things can go wrong, so to speak, right? Now, the other side, and this is what's starting to interest me a little bit, is there are three sectors that I actually like going forward because we have some upcoming catalysts upcoming, and I think everything going now, this roller coaster is just a little bit of a short term, roller coaster, so to speak, like the short term volatility. So if you want to know my three sectors and some stocks in them, we could get to that.
Let me hear them.
All right. So first is it will be proactive because I do think the market starts to rally as we get into near terms to basically cook the books and make everything look, good, right? No one wants to have a party at their house and have a dirty house and you want to make it look good, right, for your guests. So I think midterms market gets near all-time highs. So what do we have in anticipation later this year, maybe even June, is we have the SpaceX potential IPO and we have the OpenAI potential IPO. So with that, we have space stocks, names like ASTS, Rocket Labs, Planet Labs, ticker PL. You could just look at the UFO ETF. It has like a whole basket of space names. The space sector is starting to see the biggest bounces when the market goes up, or the most aggressive moves to the upside when the stock market holds or rallies. So space investors are showing a strong appetite and they're being aggressive, gobbling up the space stocks. The second sector is AI. And the reason AI is the potential open AI IPO. Now, I'm not saying go buy some AI penny stock that you read on a newsletter because those usually aren't the good ones. But if you look at some of the data storage companies and the companies that will benefit from AI or have an investment in open AI. So I'm talking like names like NVIDIA that we all know, but it's down you know around 20% or so from its high. But you saw when the market rallies, NVIDIA shares rally strong, very, very strong. Google's another name. They have Gemini. They're a big, strong player in AI. You're seeing big bounces in Google when the market rallies. You're also seeing the data storage names like Micron, Western Digital, Seagate. These names have been very, very strong in the past. So with their sell-off with the overall market, they're having the biggest bounces to the upside, usually two, three, or 4x what the overall market is doing. So I really like seeing that because it goes to show you if the market recovers, these names and these sectors are going to be the strongest ones to recover the quickest and recover the most from a percentage point of view.
Yeah, it's interesting. Roger Scott had a great quote the other day on the channel saying that they all look the same on the way down. They do not look the same on the way up. So
Right.
then what was your third? You said you had three. You said
Uh,
space and tech and
And we'll throw in semiconductors in there as well.
all
And
right.
some of those names like NVIDIA is a semiconductor, but what I really really like that doesn't get much attention because it's kind of a one of the old kids on the block is Intel. Intel had a massive sell-off for the last 5 years, and then recently we saw the U.S. government take a stake in the company, and it had a surge. It nearly doubled in a few months. Well, now when we're seeing the market rally, we're having Intel go up like 7, 8% in a day. That's not normal. Intel's not some penny stock. It's like a lot of people have Intel in their 401ks. It's kind of like used to be like an old dead tech stock, kind of like an Apple, but you're seeing some massive moves in Intel to the upside. So that's one of my favorite semiconductors that doesn't get a lot of talk, I feel like, anymore.
It's interesting because a lot of these companies, like an Intel or a Honeywell, for example, people of a certain age remember them as like your processor for your big old PC that you played Oregon Trail on, or
Right.
your home alarm system. And people aren't aware that they've pivoted so significantly. Like Honeywell makes, some of the hardware for space exploration, to your point on
Right.
your first sector.
Right. Right. And where these stocks aren't so strongly promoted on the media because they're not like the sexy new, you uh, I don't know, America's Top Model. I don't know if that's a show anymore, but they're not
They
like
don't have
the
they don't have a CEO that wears the exact same thing every single day,
right.
or like
And
some crazy story behind him.
right. And they're not making the podcast rounds trying to, hop on a yacht with Jeff Bezos in Miami and stuff. Like they don't care about that. But there is some really strong companies out there that are shifting to AI. And I mean, you could even look at Amazon and, Google. Those are two companies that are very, very strong, really benefiting from not only AI and robotics, Tesla included, that like just don't get grouped into the like darling stocks anymore because people think they're old, kind of, oh, Amazon, everyone knows that now. Well, they're big movers. And not only that, but they make up such a large portion of the NASDAQ 100. Why not stick with the basics, is what I'm trying to say.
Yeah, they're not sexy, which I think is a great word for it, but they're almost too big to fail, is what you're saying.
Exactly. And with so much risk out there, why would you want to drive that Lamborghini up and down the mountains with a slippery road when you could get a steady 4x4 forerunner that is going to take you from point A to point B?
Yeah. So we've talked about the entry points where to get in, but at what point do you sell? Because at some point the physics are going to catch up with the space race, et cetera, et cetera. So where do you know, all right, I'm gonna get off of this bus?
Really good question. So I think you want to try to initiate entries on red days, or we call when there's blood in the market, when there's a lot of fear no one gets into. Usually, if you buy a stock and you're feeling pain, it's a great entry point. When you're buying a stock and it looks good, the pain's going to come later, right? So you want to do the hard decisions where you can't stomach it instead of hitting the buy button when it's all green and sunshine and roses. It sounds crazy because why would you want to be in pain and suffer? But that's usually the best time to get it, right?
That feels like the only tenant that is applicable in today's market, where you still would prefer to buy low and sell high.
Exactly. And then to answer your question on when to get out, especially let's say space stocks, because those are way more volatile, right? And there's no sugarcoating it. There's a lot of unknown in the universe, so to speak, and in space stocks. So I think you use the same approach to both space and AI. Is that you have, let's say, the SpaceX IPO, which I'm assuming is probably going to be before OpenAI. You want to buy an anticipation of the news and then sell once the news is out. So you buy the rumor, sell the news, as they always say. So let's say SpaceX IPOs, you're going to have the biggest IPO ever, and
Historically, yeah.
you're going to have ETFs. You're going to see new funds making new ETFs with space stocks. You're going to see mutual funds. You're going to see maybe even S&P 500 inclusion very, very soon because they want a part of it. All the space names are going to go up, right? So in a rising tide, all the boats are going to lift. I think you use that because all the sheep are going to say, oh, what's another space stock I can buy? And you want to feed the sheep. Or as I always say, like when I have a position on trading, I feed the ducks, right? So you see the whole ducks come to you at the pond, you give them bread, you feed the ducks, you start taking profits out there. Same with the AI trade. If OpenAI goes public, you're going to have, oh my God, AI, everyone, their grandma, everyone's going to know about AI. Well, you use that to start trimming and selling some position in some of those AI stocks because everyone's going to want them.
Where's the mistake here? What's the hard no-no?
I think the hard no-no is waiting for everything to rally and for the market to be safe and then getting in. Because by the time you get in when it's safe, the easy money has already been made. And I think a lot of people can't stomach when things are ugly out there and they can't be proactive because naturally as humans, we want to be reactive. We don't want to jump into the water when it's cold. We want to see other people in the water telling us, oh, yeah, the warm water is nice. It's clear. You can see the bottom. There's no stingrays. There's no sharks. Jump in. And by that time, you're too late when it comes to investing and trading.
So then on the timeline, right, we have long-term investors who are just going to get in, and they have a very different outlook than someone that's going to trade in the time span of a day.
Right.
This market as it looks right now, who does it cater towards?
1000% traders. If you're an investor, what you do, and this is what I tell my close friends this, is you have a set game plan to where every month or whenever you can, you close your eyes. You either have it, however you have your account set up to take money out. You don't look at it. It automatically, you cost average and long term, whether it's an ETF or the broader market, usually the safest. And as an investor, you don't look. You don't look at your P&L. You don't look at it on up days. You don't look at it on down days. You don't look at it. I used to put a sticker over my P&L when I would trade so I wouldn't get emotionally tied to the P&L swings. So as an investor, I think that's the best thing you can do. Like I don't even log into my accounts because I don't want to know how much money's in there, if they're up, they're down. I don't want to know. I mean, it
I'm
sounds
the same
crazy
way.
because Right. It sounds chaotic and like I'm some psycho, but if you know it's going to influence your emotions. As a trader, though, obviously, um, you have a limited number of buying power, you have, multiple positions, right? Then it gets into a little bit more complex. So I always say separate, like if you have a retirement account or an investment account, separate that from your trading account so you don't get influenced by the different P&L.
Yeah, you can put a firewall between the two. That makes a lot of sense. What would you say the last key takeaway is for folks who are listening?
The tough times in the market usually don't last long. So even though we've only had 3 weeks green out of the past 12, out of the 12 weeks so far in 2026, I don't want to sound like a permable and say stocks only go up, but usually corrections, bear markets don't usually last. And by the time they're over, it's usually too late and the easy money is made. So try to stomach the short-term pain and be patient. And if you do, you'll be rewarded in the long run.
Yeah, you got to close your eyes, drink a beer, take a Xanax, whatever it is.
Hey, I've seen it all. We used to snort. Well, maybe I can't say that on camera, but there's a lot of when there's money on the line, you got to do what you got to do to get by.
That's right. Well, Lance, thank you so much. For people who are interested in following you and watching any of your shows, we'll be sure to link that in the bio below. And in the meantime, for you guys who are watching, we'd love to hear your thoughts on this, what you're doing, how you're managing the market, and any other topics that you think would be interesting for us to do interviews on. And in the meantime, do us a favor, click like and subscribe.